Hi, Joe Kehrig with the Kehrig Real Estate Team, and this is your San Ramon Valley update. Before we jump into the graphs, let's talk about interest rates because there's so much talk now because Jerome Powell is leaving. They have a new Federal Reserve chairman coming in, and everyone thinks, because the new one is more favorable for lowering the rates, that mortgage rates are going to come down. And you know what? I hardly even look at that. There's only one thing that I look at if I want to see where interest rates are going, and that's a 10-year Treasury. First off, remember, the Fed rate has nothing directly to do with mortgage rates. It's short-term lending to the bank. So it will affect your credit cards, it will affect car loans and such forth like that. But it doesn't directly affect. Sometimes they'll lower and the interest rates will actually go up because what the banks do and such and the lenders do is they bake in something thinking that it's going to go up, their cost is going to go up, so they bake in something and it doesn't happen as much as they thought. So you actually see rates come down when the Fed rates might, raise their rate and vice versa. What I look at is a 10-year Treasury, because with the 10-year Treasury, you look at the 10-year Treasury for decades and it follows the interest rate, or the interest rate follows a 10-year Treasury bill. And so if you look at the graph I have up here, you'll see that obviously in 2021 it was below 1.5%. It was almost down to 1%. And so that's when, remember, interest rates were 3% or so. Well, then you see it went up, and then during the end of 2023 it went all the way up to 5%. Remember, interest rates got almost up to 8%. Because usually there was less than a 2% gap with it. But obviously, because the Fed raised rates so fast that the gap became a little bit larger. So it's, 2% or a little bit over 2%. But this is why I don't feel rates are going to change. I feel, the high fives to the mid sixes is where we're going to be, where we've kind of settled in at. Because again, looking at the graph for the last 2 years, you can see it's basically hovered between 4 and 4.5. You add the 2% to that, that's 6, the 6.5. That's why we've seen some high fives, mid fives, even for maybe a 7-year fixed rate, all the way up to, like I said, the mid sixes or so. So again, don't expect, interest rates to really do a whole lot. They're gonna fluctuate. They're gonna come up and down, and the Fed rate might affect them a little bit. But if you want to know what interest rates are doing, watch the 10-year Treasury. Watch the bond market. That also affects that. The second thing I want to talk about, if you remember a few weeks ago, I said we're going to see inventory come up during the spring, and especially after the Easter break, spring break, because what happens, a lot of people wait because people are gone on spring break, so they wait to put their home on the market till after spring break, after Easter break. And so what we do is we have a flood of homes on the market. Normally we might have 2 buyers for every 1 home before. That's why the market is active, prices are good. And then after spring break, we certainly have more buyers. We might have 3 buyers, but now we have 3 buyers for every 6 homes because the inventory rises. It's not a matter of interest rates or the number of active listings going up, because we know that's going to happen, and that's what we've seen the last couple of weeks. It's the absorption rate of seeing that, okay, how is the market reacting? Because if you go a couple weeks after spring break and the gap between the pendings and the active continues to grow, that means you're going to have somewhat of a slow market. Well, our first indication, when you look at what we're looking at here with, the San Ramon market, you have a situation where you saw, inventory went up and up. It went from 130 something, 140 something to 150 something. And last week it was 157 and it went down to 147, and you can see pendings went up by 11. So when we talk about absorption rate, this is a very good for the sellers that you're looking, because obviously everything's about supply and demand, and the more supply there is, compared to demand, Well, that hurts the sellers because there's more homes to choose from for buyers. Well, we saw a great absorption rate in San Ramon, and if it keeps going like this, it's going to be a strong season again for sellers. Where right now it's kind of an even market. You look at the Danville market, and same type of thing, except actives didn't go down that much, but you saw pendings went up, by 5. So again, that were active listings were going up, up, up. Pending listings were going down, down, down. We've completely seen a switch in that. In Alamo market, it's, active inventory went down a little bit, but so did pendings. So that market stayed pretty steady. And the one thing I want to explain to you, when you look at these graphs, you see the days on the market, how, they were in Alamo, they were 14, they were 6, and then all of a sudden they were 41 last week. Well, sometimes in an area like Alamo, where you only have 4 or 5 pendings and sometimes 2 or 3 pendings, one sale can just really offset the market. And that's what we saw in Alamo. There were 5 closed sales in Alamo. Every one of them sold within 2 weeks because the Alamo market is extremely hot. But there was one townhouse that was on the market that stayed on the market for 273 days and finally sold. If you took that out of the equation, instead of 41 days on the market, you'd probably have 14. So again, the market's very strong in Alamo, very steady. The Dublin market, you've seen the same type of thing. Active stayed about the same as pendings, but what we have seen is we've seen the last couple weeks where the market, has stabilized a little bit, because again, as we were going into the spring break, we saw actives go up, pendings go down. So right now, the market's looking strong, and definitely when you look at the active or the percentage of homes, everything's still selling at about 100%. Even with that one townhouse that, that basically went below asking in Alamo, you still had 102% of asking price. And again, you take that townhouse out, and it probably would have been 103, 104% of asking, less than 2 weeks on the market. Alamo market's extremely hot, especially West Side Alamo, West Side Danville. The rest of the market, there are some markets out there like Dublin and San Ramon in that $1 million to $1.5 million range that, single family is a little slow right now because inventory is building up. And the buyers are really finicky, because what the buyers are doing is they feel that they're kind of waiting for interest rates to go down, or, you watch the news and there's so many soothsayers of doom looking at the overall market for the United States, and that's not what's happening here. So if you're a buyer, I would not wait. I'd be a buyer in this market. Just make sure you're a smart buyer and buy something, because remember, people always say, because I've purchased and sold properties, people go, you made a lot of money when you sold it. And I go, no, I made a lot of money when I purchased it, because that's where you make your money, is on the purchase. So again, this market is very fickle. It's changing weekly. So make sure you tune in. If you have any questions about your home, give us a call. We'll sit down, we'll consult with you. We're not there just to list a home, or we're not there just to sell your home. We're sit there to help you devise a plan and figure out what's best for you. As when I meet with people, what I tell them is, 80% of your decision to either buy or sell is personal. The other 20% about how's the market doing, what's going on with prices, that's where we can help you out. So we're just going to try to give you the pieces of the puzzle we can. Then you make the best decision for yourself. But give me a call. 925-487-6838 is my personal cell. Or drop me an email, joe@kerrigteam.com. Or if you want to hear more about the Kehrig team, or see some of our blogs or our past videos, you can visit our YouTube channel through our website. So again, make sure you tune in. This is a very fluid market, but again, expect interest rates and probably prices to fluctuate up and down a little bit, but probably not a lot of changes. But again, we're in a world economy, and that can change overnight. So make sure you stay tuned.